Hey folks, I have arguably invested more money in the stock market in the last week and a half than I pretty much have since the beginning of this year, dumping over 10,000 in a week ago, another 5,000 yesterday, and I'm looking to invest more probably by the end of this week into early next week. But it is almost bipolar in a market like this, listening to CNBC with the bulls and the bears butting heads. And I want to take a listen because even today you would have heard of a lot of things just like this.
Let me guess, David thinks this is a bear market rally and there's nothing to be excited about.
It is a bear market rally. It's got all the hallmarks of a bear market rally. We've seen 6 of these already. You know, it reminds me of Warren Buffett's famous line about, the one thing that we know about history is that people don't learn from history.
I don't think it's a bear market rally. I think this is a bottom. Bottoms, you never know what a bottom is until you pass from one. I think to see and hear about this capitulation all the time is excessively consensus. Been looking for consensus, or looking for capitulation for a long time.
Now, being primarily an active kind of passive investor that is still trying to outperform the market, I have to take into consideration the market conditions when I decide to start doing these large buys, because I've been very fortunate to not only in this bear market beat out Cathie Wood, the likes of Warren Buffett, but I want to continue doing that. And that's why I'm making these videos for you guys, not as a brag, but just to give you further insight into how I currently see the market here, folks. And a lot of the bullish sentiment personally for me as it stands today, before we talk about the investments that I'm making, many of you OGs know probably exactly what I'm buying, but taking a look, guys, we're heading into one of the most pivotal earnings seasons that I think we've had. And I say this a lot, every earnings season has been relatively pivotal this year, but the fact is Wall Street thought this would be the earnings period where we would see a compression in revenues, EPS numbers, and margins starting to get hit. But honestly, the banks and these early earnings that we're getting are really showing resiliency in the economy. I mean, we heard Jamie Dimon from JP Morgan say that the bank savings accounts for most people out there are relatively high, higher than on average and normal. Bank of America posted phenomenal numbers, beating EPS and revenue, driving up Bank of America's stock. I mean, just in the last couple of days here, it's up 16%. JP Morgan following suit. And I've told you that valuations don't really matter in the market, because if they did, I honestly think there'd be much more aggressive buying. And obviously, if valuations mattered, stocks wouldn't have run to the absurd levels that they did. This is a complete psychological game. I've mentioned the stock market is pure fugazi, and you kind of have to judge sentiment off your own knowing and your own kind of intuition. This isn't an easy game to be playing, but arguably, if you're a value investor, you can't help but look at these banks with these last earnings periods and say, damn, if there was a buying opportunity, it's definitely in these banks, which is why I've been buying, banks and in these index funds relatively aggressively right now. But there's some more intriguing facts coming out of the market. Like, here's a quick article from, Routers, where we're hearing this term a lot, that investors start to expect policy capitulations. But just reading into this, guys, investors raised cash levels further in October to their highest in 21 years. As sentiment toward the economic outlook remains close to max bearishness. The latest global fund manager survey, which is the FMS by BofA, showed on Tuesday. And I think it's just giving full clerical insight into the fear that investors don't want to take on risk right now. They're still worried about how far the markets can drop. They're hearing things from Michael Burry, all these big investors saying that there's still potential 20% downside here. And it's just, again, that bipolar bull and bear case. And again, most people are dumping money into bonds, GICs. They're holding that cash. And eventually, as the market sentiment's going to shift, I don't know if that's the next month, 3 months after this earnings period, who the heck knows? But when that sentiment starts to shift, guys, people are not going to want to miss out on those huge gains, and they're not really going to be caring about their bonds paying 4 to 5%. I can promise you that, because it's a psychological game. When there's more money being made somewhere else, that's where all the money's going to go. Again, that's why the market got so insane, right? But right now, we're still sitting in this level of fear as people try and game out exactly what's going to happen with this earnings period, what's going to happen with the interest rates, what the Fed's going to say. Is it going to pivot anything? What are the inflation rates? Well, I think people are starting to care less and less about inflation, as we showed in those last inflation numbers when they were worse than expected, yet the market was able to rally pretty aggressively off of that. But we still currently sit in this kind of fear-driven area, but my fear is starting to alleviate amazingly. I mean, we're looking at inflation month over month is back to a nominal rate, presuming it stays at about a 0.3% at the minimum a month, or at the lowest end or the highest end, playing in between a 0.2 and a 0.4% range. But nonetheless here, folks, just taking a look at another thing you have to be fully aware of is that you're not going to know when the market bottoms, and you're not going to know when it starts to take off, because it's not based off the recessionary data. The S&P 500 usually declines significantly during a recession recession, but it falls as much as 55, well, it fell as much as 55% during the Great Recession. The index often begins to fall well before a recession and starts to rebound well before a recession ends. And I honestly think, as we currently aren't sitting in, I guess, the real recession, or as Biden would like to say, I honestly think when the data comes in that would state that we're in a recession, that it might even be too late, as it had been priced into the market, presuming there's no other crazy black swan events. So when I take into consideration the initial earnings period here, I do think that we're going to get probably a better than expected earnings period, which has led me to continue to buy really aggressively into the S&P 500 index, along with BDY, my dividend funds here, guys. And I just can't help myself. I don't know if this is a bear market rally. I don't care what it does yesterday, today. I just see the levels we're sitting at. I like the yields that we're getting, and I think there is going to be some potential upside that's probably going to be far greater than where we were coming into the next 3 to 5 years, because I'm not buying anything to sell it pertainably tomorrow, right? But when I can lock in these over 4% yields off index funds, I mean, the S&P is now paying well over 2%. That has driven up my general portfolio to having an actual annual yield now that is about 3.3%, and we're damn near going to cross 11,000 in annual income. My goal, hopefully going into early next year, is utilizing these index funds and these, this very diversified method of generating passive income, is to get that 1,000 a month, get to 12,000 annually, where I am not actually having to worry about the stocks themselves, because the index funds will do that work for me. And then as we head back into a growth market is where I'll be pivoting more into kind of aggressive growth-based funds. But you have to imagine, guys, that I'm not looking for the same kind of growth that I was in the past, because I'm at a level now, thanks to obviously the individual stocks that I invested in over the last several years, getting me to this level. I only need to make 8 to 10%, including this dividend here. And you're talking about, on a 300K portfolio is over 30,000 a year. And if I can just sustain that for the next decade, where that could take me could be extremely profound. So why do I need to take on more risk than necessary? The evolution of what I've been posting on this channel since I created it back in 2019. And I know a lot of you kind of jab at me in the comment section below for how I pivot and how I change. But again, I am just publicly sharing with you the evolution of how I invest, which again, for as long as I outperform the likes of Cathie Wood and Warren Buffett and continue to, I will continue to share my insights, obviously on this YouTube channel, but again, not financial advice. And it's fun to look back in time, guys, and just take a reminder of the crazy speculative environment we have been in for the last few years, especially with crypto getting highly cracked down on right now, and finally seeing the Nikola story come through with the big SPAC rush that, if you don't remember, the special acquisition or the special purpose acquisition companies, where you could buy into them like holding accounts, and they would invest and, take your money and buy into these massive companies to bring them public. And Nikola, God, is one to remember. I just want to share this little story with you briefly because, he's finally coming to court here, guys. Trevor Milton, the guy that took all of your investor money, dumped it into private jets in the largest house in Utah, I think. And just, take a listen, because, God, these are the new times we're living in.
Founder of Nikola Motors, facing years in prison following his conviction on fraud charges. He promised to revolutionize the auto industry, but was found guilty of misleading investors.
This morning, a billionaire founder found guilty of defrauding investors for his $3.3 billion company with technology that didn't exist.
We've built something that no one else thought was possible.
The jury finding he lied to investors about the progress his company had made in producing zero-emission 18-wheel trucks fueled by electricity or hydrogen, now facing decades in prison.
This truck is by far the most state-of-the-art truck ever built in history. This thing fully functions and works, which is really incredible.
Prosecutors saying Trevor Milton is a con man. He lied to investors to get their money, plain and simple. Nikola shares value eventually surpassing Ford Motor in June 2020. But soon after, an investment firm accusing Milton of making false claims, using this video as an example, showing a truck rolling down a hill to make it look like a working prototype.
You got to love the Hindenburg Report. What a great name for a company that's going to come after you and take you down when they lied about this functioning truck. They were actually just rolling down a hill. And as, Trevor Milton's final sentencing date comes up, I think in, what do they say, January, February of next year, it's also fun to remind that if any of you are into the OG, this kind of nostalgic stuff, I have been watching Martin Shkreli, the pharma bro that finally just, made his way out of prison. So as Trevor Milton takes his place, where I think Obviously, Martin Shkreli, from my personal opinion, did much less bullshitting than, unfortunately, Trevor Milton did. It's always fun to come back and just catch up on these nostalgic stories to remind ourselves of sometimes when the risk we're taking in the market and how overhyped things can be, that to be cautious is not the worst thing in the world. Because again, I ended up selling a lot of my stocks, including Tesla, a lot of these companies, when they were flying up, and I felt bad because then you feel like you're missing out. But then in moments where the market comes into this, it's always a fine reminder why taking profits when the market's hot and continuing to diversify those profits is so prudent, as it's shown also in my own personal portfolio performance. And again, I'm not trying to gloat or brag here. It's just crazy to look back in time and see how fast the market cycle can truly shift after this crazy decade of a bull run, followed by an even more speculative bull run in the last few years. But I'll pass the question off to you. I'd love to know what you guys think about all this in that comment section below. What are you doing in the markets, and how are you surviving this? Do you think we're gonna see another crazy downside, or do you think this is the end of the bear market? I'd love to hear about it. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.